Welcome to another episode of the Divorce Lawyers podcast, brought to you by DivorceLawyers.ca. We understand that going through a divorce is a challenging time, and when there's a business involved, things can get even more complicated. I'm Deepa Taylor. Today, we'll be diving into the role of business valuation in divorce proceedings. We'll explore why it's important, how it works, and what you need to know if you're a business owner or if your spouse owns a business. Let's get started. To kick things off, let's talk about what business valuation actually means. In the context of a divorce, business valuation is the process of determining the economic value of a business or an ownership interest in a business. This is crucial because the value of the business will often need to be divided between the spouses as part of the property division. But it's not as simple as looking at the numbers on paper. The process involves a thorough analysis of the company's financials, including assets, liabilities, revenue, and profits. It also considers factors like the industry, market conditions, and the specific circumstances of the business. So, why is business valuation so critical in divorce proceedings? The primary reason is that the business is often one of the most valuable assets a couple owns. Whether it's a small family business or a larger enterprise, understanding its true value is essential for fair division of assets. Another important reason is that the valuation of a business can affect not only the property division, but also spousal support calculations. The income generated by the business, whether retained earnings or distributions, plays a significant role in determining the support obligations. It's also important to understand that not all accountants are qualified to perform a business valuation. This requires a chartered business valuator, CBV, a professional who has undergone specialized training and has the credentials to assess the value of businesses accurately. Now, let's walk through the process of business valuation in the context of a divorce. It typically starts with a thorough review of the business's financial records. This includes balance sheets, income statements, tax returns, and other relevant documents. The valuator will also assess the market conditions, the business's assets and liabilities, and future earning potential. There are different levels of business valuation. A comprehensive valuation involves an in-depth analysis and verification of all financial information, while a more basic calculation might rely on fewer data points and assumptions. The choice of valuation level often depends on the specific needs of the divorce case and the resources available. Business valuation in divorce isn't without its challenges. One of the most common issues is determining how much of the business's value is tied to the owner's personal involvement. In many cases, especially with small businesses, the owner is the business. This means that if the owner were to step away, the value of the business might significantly decrease. Another challenge is dealing with unreported cash income or personal expenses being run through the business. These issues can complicate the valuation process and require a critical eye to ensure that all income is properly accounted for. Let's not forget about the emotional and trust issues that often arise in these situations. In many divorces, one spouse may distrust the other's financial disclosures. This is where the role of a financial neutral, like a chartered business valuator, becomes crucial. They provide an unbiased assessment, which helps both parties and the court trust the valuation. So what impact does the business valuation have on the overall divorce settlement? First and foremost, it determines how much the business contributes to the net family property, which is crucial for the division of assets. For example, if one spouse brought a business into the marriage that has grown significantly in value, that increase in value may be subject to division. Furthermore, the valuation also influences spousal and child support. The income that a business generates, including any undistributed profits, can be considered when calculating support obligations. This can sometimes lead to disputes, especially if one spouse believes the other is hiding income or undervaluing the business. To make this more concrete, let's consider a hypothetical case. Imagine a couple where one spouse owns a car dealership. Over the course of their 20-year marriage, the dealership has grown in value from $1 million to $5 million. When they divorce, the increased value of $4 million is subject to division. But what if the spouse who owns the business argues that a significant portion of the business's value is tied to their personal goodwill? Or what if there are allegations of unreported cash sales? These are the kinds of issues that make business valuation in divorce complex, and why having a professional involved is so important. At this point, it's clear that a chartered business valuator plays a crucial role in the divorce process. They don't just crunch numbers, they provide a comprehensive analysis that considers all aspects of the business. They act as a financial neutral in collaborative divorces, ensuring that both parties have a fair and accurate picture of the business's value. In litigation, the valuator's report can be a key piece of evidence, and they may even testify in court to support their findings. Their independence and adherence to professional standards give their valuation reports significant credibility. As we wrap up, here are a few final thoughts. If you or your spouse owns a business and you're going through a divorce, it's essential to understand the role of business valuation. Make sure you work with a qualified professional who can provide an accurate and impartial assessment. For personalized guidance, please consult one of our family lawyers by visiting DivorceLawyers.ca. Don't hesitate to ask questions and ensure you fully understand the valuation process and its implications for your divorce settlement. Remember, the goal is to achieve a fair division of assets and to ensure that support obligations are based on accurate financial information. Business valuation is a critical part of that process. Thank you for joining me today on the Divorce Lawyers podcast. I hope you found this episode informative and helpful. If you have any questions or topics you'd like us to cover in future episodes, please reach out to us through our website at DivorceLawyers.ca. Don't forget to subscribe and share this podcast with anyone who might benefit from it. Until next time, take care.